Welcome to Grow Your Business and Grow Your Wealth. Gary Helt is excited to bring you another powerful conversation to help you grow and protect your business and finances. Today's episode is hosted by a special guest, personally selected by Gary, so you can keep learning and moving forward even when Gary is off the mic. Settle in and enjoy today's insights.
Welcome back to Grow Your Business and Grow Your Wealth. I'm Jack Reeder, guest host today, sitting in for Gary Helt. Today, we're digging into what smart financial leadership looks like for business owners who want to grow without losing control of their numbers. I'm happy to be joined today by Patricia Santayana, CPA, president of Delphi Advisory Services. Patty works with small and mid-sized businesses, helping owners gain clarity, structure, and confidence in their financial decisions. She holds a master's of accounting and a bachelor's degree in accounting from Florida International University. She's a certified QuickBooks Pro advisor and a member of the Alliance of Women Executives. Outside of work, she enjoys pickleball, quilting, and tending the chicken coop and beehives she built with her sons. Welcome to the podcast, Patty.
Hi, thank you for having me. Thank you.
It's great to have you. Let's start by taking a quick trip in the Wayback Time Machine, Patty. How did you get started in business?
So I've always been an entrepreneur at heart. My father has a jewelry store, and so I've always been working as an entrepreneur, with the idea of a business owner. And we've had this jewelry store for 40 plus years. My mother runs it with my siblings and stuff. And it's always taught me that being a business owner is really exciting. It has a lot of great benefits, but it's also kind of scary because a lot of times you're making decisions that not only affect you, but everybody you work with. And as an accountant, I was a CPA, and as an accountant, I always felt that there was something missing. That I knew a lot of the stuff, but I didn't know everything. And so I joined the CFO project, and I learned that there is so much more to your business than just the financial statements that the accountant throws at you every month that you look at and you're going, okay, that's great. And so I've learned to help business owners really understand what those financials are telling them and really plan for the future.
Great. That's a very interesting background. So when business owners first come to you or you first meet them, what is the biggest financial misunderstanding that you frequently see?
They look at the profit at the bottom of their income statement, and they're like, okay, I have my business shows a profit, but every month I'm running to finish payroll, or I'm always strapped for cash and I don't know what's going on. And so that is where they start off. They know their business should be doing good, but they don't understand why it's not doing good.
Okay. So many owners think they're doing fine because revenue is coming in. But what numbers should they really be paying attention to?
So they need to be looking at not only what's going on in the income statement, but what's going on in the balance sheet. So the balance sheet is where managers need to be looking at to see what's really going on in the business. So some of the things that affect cash that don't necessarily dribble down into the income statement is loans, different loans that businesses take. And they take these loans to get the business to the next level, but then they're using today's dollars to pay yesterday's bills. And so then they're cash strapped. Or maybe the owner takes of the business as like their own little piggy bank, and they're just taking money out all the time of the business without really understanding how it affects the business. And sometimes businesses fail not because the business isn't successful, because the business doesn't have income, not because the business isn't doing well, but because the business doesn't have the cash to move to the next level. And understanding how cash really affects the business and how it can inhibit or help the growth of the business is what really makes a difference.
And so if you were talking to someone who just was, they have a CPA, they have maybe a bookkeeper or both, a bookkeeper who works with them on a regular basis, and then they have a CPA who helps them with their taxes. But at what point should a business move beyond just having basic bookkeeping done and into true advisory support like you provide?
So a business, when they reach at least 500,000, that's when the business starts, the owner needs to start taking off some of those hats. And so that's when they need the CFO. So what ends up happening? The accountant, the bookkeeper is just doing the books. They're not analyzing the books. They're not telling you what's going right. They're not telling you where you're spending your money. They're just putting the information into the financials and they're giving it to you. And maybe they'll tell you, oh, you spent a lot of money on this or you spent a lot of money on that, but they're really not planning for the future. The tax person is only strategy is, how can I save you in taxes? Because that's really all they're asking for. Oh, I need to pay less in taxes, less in taxes. But paying less in taxes is not necessarily what is beneficial for the business. And what does that mean is if you're spending money that you don't have, so you pay less in taxes, you are putting yourself in a bad position. And so the money you spend has to bring in revenue. So every dollar out has to be producing some revenue. And if it's not, then you need to question, what am I doing? Why am I doing this? And those are the kind of questions that as a CFO, we answer. We just look at everything. And it's not whether it's coded correctly. It's not bookkeeping. It's not the accounting issue. It's the long-term goals. What are the long-term goals of the owner? Those are the kind of questions that I like to ask. Where do you see yourself in 5 years? What do you want for 5 years? So if that's what you want, this is where we backtrack and say, okay, if you want to have this business producing $1 million that you can take home every year before taxes, okay, so what does that mean? Where does we have to get the revenue to? Where do we have to get your expenses? Where do we have to get everything to so we can get to that goal? And so those are long-term planning. And you can't sit there and say, oh, I want that in the future and not plan for it. You really have to plan and every month go over and see, are we on track or are we off track? A lot of times businesses, they don't fail like a giant crisis. It's usually those little things that start going bad, one after another, that you're like, oh, the cost of goods sold has gone up a little bit, but it's not a big deal. The rent has gone up a little bit, but it's not a big deal. It's this gone up, but it's not a big deal. But when you put it all together, then it becomes a big deal. And so as a CFO, we're looking for all those little things that make a difference. So that way, the long-term goal, you make the adjustments for the long-term goal so that at the end, you get to where you're going.
So what would you say are some warning signs that tell you or might tell a business owner that they're growing faster than their current financial systems or management can handle?
So sometimes the sales are up. Wow, the business is super excited. Sales are up 20%, but the revenue as a percent of sales is actually down. So what that means is that you are working twice as hard, making less money. And so that's where you have to say, okay, is that really the growth that I need to be doing? Is that the right growth? And so you're looking at not only at your top line revenue, but where the profit as a percent of revenue and how that helps. And then also whether you're having enough revenue coming in to cover all your expenses and all your debt and all the things that you want out of the business. So those are the kind of things that you have to look at the big picture, at everything.
So Patty, you mentioned $500,000 of, I guess, gross revenue, right? In terms of when a business is maybe ready to get some CFO or advisory help. Um, when you think back and look at the different kinds of businesses and industries that your clients are in, have been in, are there particular kinds of businesses or industries that you prefer to work with, or is it more about the numbers and the revenue that you mentioned?
So I'm specializing in the medical fields and the lawyers and stuff, but I can work with just about any business. I've worked with construction, I've worked with retail, and I've done different clients. I'm working with one that's in manufacturing, so I can work with many different types of clients. And so it's just somebody who's willing, who understands that they need the help and they're ready to go and get their business to the next level.
Okay, good. So how important is it, would you say, to have clean, accurate data, that you mentioned, if they've got a bookkeeper or bookkeeping function in their business, and if it's doing a good job, do obviously that's important that the information is accurate. Do you sometimes find that there are problems there that they're not really doing, that they need to make upgrades in their bookkeeping function?
So where we start off with is directionally accurate. So as a business owner, you generally know where your business is going. So you know when it's doing well and when it's not doing well. And a lot of times people are embarrassed about their financials and they think, oh no, I need to fix all the financials before I can show it to somebody so that they can help me. And the truth is, that's just one of the steps in the process. So as long as the financials are directionally accurate, so more or less going in the right direction, is it going to be perfect? Absolutely not. Every bookkeeper, every accountant does things a little bit different. They code things a little different. They have their own little ways of looking at stuff. So is it going to be perfect every time? No. Directionally accurate, and just that's all you need to get it going, to get it started, to figure out where we are now. It's like the when do you plant a tree? When is the best time? It's 20 years ago. If not, it's today. So, I mean, when you want help with a business, you don't wait till everything is perfect. You start today and get it going.
Yeah, good advice. Let's talk a little bit about technology. I know you're a QuickBooks Pro advisor. I'm not sure if you use that yourself anymore, but how has technology benefited bookkeeping, financial management, etc.?
So the technology is great because a lot of the simple tasks can be automated, and you're able to get more information out of your systems. So depending on how automated your system is and how well you have it structured, you can get a lot of information out of it easily. And so it's really exciting because you're able to pull a lot of reports and specialized reports. And so if you want to see if different products are performing better than others, there's so much technology available now. And if you have your system set up in a way that you can track all of that, there's so many reports that you can pull up and really get down and understand what is the better products. And sometimes the products that sell, we've had clients that they have their top selling products and it wasn't their top performing product. So it might have been the most in sales, but they didn't produce the most bottom line revenue. It was something else that they were kind of on the wayside, not paying attention to. And when we tell them that, they're like, oh, wait a minute. I need to focus more on this and let that go because it's really not producing the revenue that I thought it was. And so those are the kind of things that technology allows you to really get into and understand.
How would you say that you help business owners make the shift or the transition from just seeing what the numbers are and kind of reacting to them, like, oh, that's good, or that's not good, as opposed to using them as they plan and work towards, as you mentioned, planning and more strategically towards what their longer term goals are?
So we focus on SMART goals. So it's not just, oh, I want to increase my revenue. I want to lower the cost of goods sold. I want to bring more money in every month. We put numbers to it. We set targets on it. So if you want to increase your revenue, how much? Do you want to increase it 10%, 20%? Do you want to lower your cost of goods sold? By how much? 5%, 10%? These are dollar metrics that really make the difference between, oh, I want to do better next year, and I did 20% better than I did last year. And it really goes down to taking the time to set the goals properly, not just, oh, I want my business to grow. It's setting those targets that really get you to the next level in growth and figuring out what is it going to take to get to that next level.
Do you find that sometimes, especially in the beginning, that the business owners are almost afraid to set a specific goal because they're worried that if they don't hit it, you or someone else will be disappointed?
I think sometimes people have never just taken the time to set the goals. It's not that they're afraid to set the goals, it's that they've never had somebody say, okay, where do you want to go? What is that number? What number are you going to be happy at? What is that one number that if we hit today, if we make, like one of our clients, they had $80,000 in cash. And I said, well, what is that one number? Is the minimum cash balance that you would have that would make you feel successful? And then they were like, oh, they hadn't thought about it. And so then we're like, okay, so let's think about that number. And so once we have set a number, it's liberating, because now you see, okay, now I have this, now I know where I want to go. And so you're excited to finally be like, okay, now I know where I want to be. I know where I want to go. I know what success looks like. And it's exciting. I get excited working with my clients because they get excited. Honestly, they get excited.
That sounds fun. So in your experience, looking back at the clients you've worked with in the past, maybe some that you're not still working with, or the ones that you are still working with, what would you say are the things, or maybe the main thing, that separate the business owners who kind of stay stuck or aren't able to, make the transition, make the kinds of gains that they're capable of, and those who are able to build, really good long-term stability?
It's a matter of not only seeing what needs to be done, but willing to do the work. Because it's not enough to say, oh, I want to increase the revenues, and then you don't do anything to make it happen. You have to put in the time, put in the effort. And then the way I help my clients is that I don't give them 20 different things to work on. We figure out what is the one or two things that are going to really make a difference in the business, and then we work on it for a month. And then we go next month and we see, hey, how did it go? Were you able to do it? Did it work? Maybe it was too big. Maybe what we asked them to do was too much. So we scale it down. Say, okay, well, how can we make it work? And so as long as they're willing to do the work and get to the next level, I mean, my clients really, they're excited. They're excited because they really see how we can change their business.
And so if let's say I were a business owner thinking about hiring you, and I love the whole idea, but I said, the problem, Patty, is I just don't have time to add something else into my schedule. How much time do you need from me to be able to be available to meet with you each month, let's say?
1 hour.
Just an hour. Wow.
Just an hour. So I do all of the analysis and all the work on before the meeting. So when I come to the meeting, I show a dashboard. So it's not even the financials. They don't even want to look at the financials. I have a dashboard And I have the one or two things that we're going to work on. And then we go over that and we discuss how they think we can get to that goal. So it's not, I'm telling you what to do. It's we're working as a team figuring out, okay, if we're going to increase the revenue, what are the few things that we can do to make a difference? And so we kind of brainstorm, we figure out what it's going to do, we figure out what the next step is, where we are right now, and we look at where we are right now, where we want to go, what are the 2 or 3 things that he can do to make that happen, and then he goes. I think I'm saving them time because a lot of times they're looking at these financials or not looking at these financials and they don't know what's going on. This 1 hour adds so much value to the business that I'm making them money.
Great. So let's think about for a second someone who's listening. They don't currently have someone like you working with them, but maybe they're thinking, I'd like to do this. What would you say if they're kind of feeling overwhelmed and don't know what to do to get started? What would be the one practical step you could just say, do this now? Just take some time and this week do what? What would you recommend?
Look at their financial. Well, for me, if they want to work with me, I do a right fit call where we talk about where they are now and how they're feeling and what's going on. But if I were to tell them one thing that they could do is really look at your financials and look at your look at what you're charging and make sure you're charging enough for what you are selling. Because a lot of times business owners are not charging enough. They're undercharging. They're afraid of overcharging. And so sometimes that is the one thing that I would tell them to look at and make sure that they're not underselling themselves.
Okay, good. So Patty, how can people get in touch with you or get more information about your services?
You can go onto my website, delphiadvisoryservices.com, and you can book a meeting with me and we can get on a Zoom call real quick and see how I can help you out.
And are there any geographical limitations if somebody's listening to this and they're in another state? Are there any limitations in that regard?
No, as long as I am able to get to their financials, and because I really am looking at their financials to see how I can help them. As long as I have access to their financials, I can help them from anywhere.
Okay, great. Well, that sounds good. Patty, thank you for bringing clarity and straight talk to a topic that so many business owners avoid until there's a problem, sometimes a big problem. Yeah. And for our listeners, this is your reminder that strong financial systems are not about perfection. They're about awareness and better decision making over time. Be sure to subscribe to Grow Your Business and Grow Your Wealth so you do not miss future conversations designed to help you build smarter, more sustainable businesses. I'm Jack Reeder, guest host for today, and I want to thank Patty Santayana for joining me today, and I look forward to seeing you next time.
Registered representative and financial advisor of Park Avenue Securities, LLC, PAS. Security products and advisory services offered through PAS, member FINRA, SIPC. The Bullfinch Group is not an affiliate or subsidiary of PAS. This firm is an agency of the Guardian Life Insurance Company of America, Guardian, New York, New York. Life insurance offered through the Bullfinch Group Insurance Agency, LLC, an affiliate of the Bullfinch Group, LLC. The Bullfinch Group, LLC is not licensed to sell insurance. California Insurance License Number OF 11617. Links to external sites are provided for your convenience in locating related information and services. Guardian, its subsidiaries, agents, and employees expressly disclaim any responsibility for and do not maintain, control, recommend, or endorse third-party sites, organizations, products, or services, and make no representation as to the completeness, suitability, or quality thereof. 2024-169104, expiration 226.